Nintendo's quarterly investor briefing for the end of the April to June 2024 quarter has now taken place. The question and answer session, which usually contains some interesting nuggets, has yet to be shared officially by Nintendo, though I'm sure word of mouth will drip the key information over the coming week. However, the slides and accompanying notes have been put up by Nintendo, so in this video we will have a look through this information and examine what it means for Nintendo and try to put it all into a little bit of context. Of particular interest here are the Paper Mario the Thousand Year Door sales figures, how Nintendo is maintaining profitability, even in what seems to be a fairly lean period for them, and at the end I find a curious quirk I can't quite explain in the Switch OLED sales for Japan. I'll put a link to the document in the notes below if you want to follow along, but otherwise the information will be on screen. And without further ado, let's get started. First of all, then we have the consolidated highlights showing a massive drop all around in sales and profits, although as we'll come to see, the actual final gross profits remain very resilient. It's also worth remembering as we go through this that this is a comparison with the same quarter last year, and this quarter last year included the debut of The Legend of Zelda Tears of the Kingdom and included the release of the Super Mario Bros. Movie. It would be unreasonable to assume that many quarters would match that kind of brand firepower. So even though the relatively meagre games lineup and the late stage of the Switch's life cycle no doubt played a part in this year's performance, almost any other quarter would fail to match up to this time last year. It is interesting that the operating profit ratio fell. This shows the proportion of sales that go straight into profit. Generally, this hovers around the 1/3 mark. Now, in a sense, this means that the percentage for last year's spring quarter was unusually high, but the percentage for the quarter just gone is relatively low. However, relative to what? Since the pandemic, Nintendo has been making massive profits, and in many respects, this is just a return to the kind of percentages seen in 2019. So I don't think any alarm bells are going to be set off just yet. Moreover, the net profit ratio has a much smaller difference, and as we'll see when we get to the gross profit, which factors in all the costs the company has incurred, or at least the ones they've accounted for in this quarter, the difference is negligible, and it's actually another incredibly profitable quarter for Nintendo by historic standards, even by recent historic standards. And look, let's set expectations. We should expect the profits Nintendo make to dip as they transition to new hardware where the production costs, to start with at least, will be higher, and where the install base is smaller, plus where they will need to plumb in a lot of advertising. The slight increase in game sales compared to last year's best-selling $70 title also could possibly make a difference to these numbers. On regional sales, the proportion in Japan is becoming larger, suggesting that the Switch has got slightly more legs there, even as it's being squeezed in foreign markets. Not a huge surprise given that competitors such as Xbox aren't really a factor on the Japanese scene. Also, the drop in mobile and other IP income is to be expected given the loss of sales from the movie. It is interesting to note that a big increase there is seen in other sales, including merchandising and playing cards. My guess is that this merchandise may include film tie-in merchandise such as the Jakks Pacific toy line for the Super Mario Bros. Movie, which is potentially still being sold, and perhaps even Blu-ray and streaming sales. But otherwise I would be interested to know if there is a particular initiative that accounts for this rather startling boost. I've talked about profit a fair bit already, but note that this slide here also highlights the exchange rate. In quarters 1 to 3 of the 2020 to 2021 year, it was 106 yen to the dollar, and 122 yen to the euro, and the following year it was 111 yen to the dollar and 131 yen to the euro. We've talked before on this channel about the effects of a weaker yen, and here they directly acknowledge the yen's impact with its statement at the foot of this slide saying, while there was a proportional decrease in first-party software sales, the gross profit margin increased by 0.9 percentage points year on year to 61.8% due to factors such as a proportional increase in digital sales relative to overall software sales and the depreciation of the yen. I'm not going to trawl the selling, general and admin expenses, as by and large they're the same, although evidently the operating profit is down for reasons that are probably fairly obvious. But check out the R&D expenses climbing up. With fewer games to advertise, it's small wonder advertising costs have dipped a little, but clearly their research departments are still working overtime in preparation for the new system. What's interesting about this new slide is that there's a fair whack in the income from foreign exchange gains. Now that would usually be expected if the yen was strengthening, but as the data at the bottom shows, it really isn't. Sharp-eyed viewers may have their own take, but my assumption would be that they had taken positions to protect themselves from the strengthening of the yen, something I speculated about in my video back in March, but since that hasn't really happened, they've been left a little more exposed. I still maintain that while there are a great many moving parts that will affect Nintendo's timing decisions on the new console, ensuring that they have mitigated all the risk they can on the currency markets is going to be one particularly big issue for them. At any rate, the yen is currently strengthening quite a bit against the dollar, although we'll see if that rally continues, so if Nintendo were looking forward to a rally, they may have one on their hands for the next quarter. Now we come to a slide that's very relevant to this channel, the forecasts. And they're expecting sales to be down, profit to be down, the annual dividend from shares to be down, and yet they're sticking still with their 13.5 million unit forecast. That's a vast number considering the stage of the Switch's life cycle, and as strong as the Super Mario Party Jamboree game is likely to sell, I feel like they're going to need something else up their sleeve to get them to these numbers. Okay, we've had a look at their profits. Now let's deep dive their business results. Hardware sales are down 46.3%, a much steeper drop than they'd need to keep them on track for their hardware targets. But again, this is a little unfair given what a highly unusual quarter this time last year was. I would guess the dip in the OLED model specifically is largely accounted for by the sales associated with Tears of the Kingdom. Similarly, the difference in software units is almost entirely accounted for by the loss of Tears of the Kingdom's numbers, with a drop of just over 20 million. Clearly, none of Nintendo's first-party offerings this quarter are anywhere close to being 20 million selling juggernauts, but Paper Mario The Thousand Year Door hit 1.76 million units in its first 6-ish weeks on the market. The Origami King's debut quarter was 2.8 million, so significantly up compared to the Thousand Year Door, but two health warnings on that number. First of all, the Origami King launched during a pandemic, and it also launched right at the start of the quarter, so it had about twice the time on the market before the numbers came in. Given the high hopes for the Thousand Year Door to massively eclipse the Origami King's sales and prove the passion among the fan base for traditional Mario action, some people might find these figures on the disappointing side, but Nintendo won't just look at the sales but also consider a number of other factors. It's a late in the lifecycle release, the development costs must have been lower, the advertising costs were likely to be lower as well, and it's launching at a time when there is huge competition for Mario RPGs, not just in the form of a previous Paper Mario title, but also Super Mario RPG releasing very recently, and with yet another Mario RPG already announced before the quarter being reported on even ended. Luigi's Mansion 2 HD also did pretty well at 1.19 million units with barely any time on the shelves at all. Only two first-party titles crossed 1 million in sales this quarter, so at the very least, these two outpaced the evergreens. Let's look at the sell-through information next. You can see that the Switch's numbers are broadly consistent from the 2021 financial year to now, with the exception of last financial year, which I think was atypical for the reasons I previously discussed. Generally, there's attrition of every console type, although the OLED model is showing the most resilience. The number of playing users still increases. Take this with a health warning, as if you log in even once during the year it counts, and yet I wouldn't consider people tuning in once a year as being hugely engaged players, but it's still impressive that 120 million people are turning on their Switches in a 12-month period, especially when you consider how many duplicate Switches there are now with the different variants. However, it seems that they're using Nintendo accounts as the basis for this, so equally, many people could be playing on one single console. Moving on, Nintendo calls Paper Mario The Thousand Year Door sales solid. Solid isn't exceptional, of course, but it is, well, solid. The proportion of digital sales continues to escalate. 58.9% of sales are now digital, over half, though this does appear to include Nintendo Switch Online and download-only software, so it's perhaps a little misleading for regular games. Still, it does open the possibility of Nintendo trying a digital-only variant of the next console, if not at launch, then sometime during the next generation. The first-party release lineup looks extremely healthy, with a game every month except December, all the way till January. I still think that gap between early November and January looks suspicious, with a strong chance that we'll see another announcement to fill that pre-Black Friday November window. The rest of the presentation chiefly concerns upcoming merchandise and projects, all of which have been previously announced, but includes the movies, museum, Donkey Kong expansion, and the new San Francisco store. They close this section by saying, going forward, we will continue to create points of contact with consumers by promoting various initiatives that utilize Nintendo IP in a wide range of fields. Sounds impressive, but it's pretty much the same boilerplate means of expressing their intention that they always use. The last thing I'm going to look at is the sales unit table, and just something I think is kind of interesting. In this past quarter, looking at just the statistics for OG Switch consoles, they shifted 12 10,000s or 120,000 Japanese Switches and 250,000 OG Switches in the Americas. Basically, they sold about 2 American Switches for every 1 Japanese Switch. But when it comes to the OLED model, they shifted 550,000 in Japan and just 280,000 in the Americas. This is a really drastic difference that's not matched in the trends from the prior year. I'm not aware of any specific Japanese-only promotion for OLED model Switches or any particular stock shortages that were affecting America, but I feel like there must be something to explain this discrepancy. I would be interested in hearing your thoughts in the comments. When the Q&A goes up, I may do a response video depending on if there's anything particularly worth analysing, but otherwise, I will thank you as ever for watching. Ask you to check out the Nintendo Forecast Patreon if you'd like to support the channel, and otherwise recommend these videos on screen before I catch you in another Nintendo Forecast